Crikey, it's me. Hi everybody. I think I met most of you in the room before, so it's good to see you all. Paul's asked me to come on and give an update on the state of business lending at this moment in time, specifically regarding the government's Corona Business Loan Interruption scheme, which is kind of pretty much the whole of business lending at the moment. For those of you who don't know, my name is James Blacklaws. The business is JB Commercial Finance. And I've been in the business finance game for 17 years, which is virtually my entire working life. As a corporate manager for over a decade for Lloyds Bank, and I set up JB Commercial Finance in 2015. And I've been... Someone shouting, or was that me feeding back on myself?
Sorry, it was me.
Something. It would be you, wouldn't it? Mute yourself.
Me, yeah. Sorry.
Mute them all, Paul. Mute them all. So... Right, so that's myself. I've been a member of the business community of Paul about 3 years ago. You launched the Harbour Group, was it, Paul?
Yeah, it seems like longer, James, but yeah, I think it's about 3 years. Yeah.
It feels like an awful long time ago, yeah, but I've been a member since then. And as I mentioned, I did an initial business bulletin on this 2 weeks ago today about my first thoughts on this particular scheme. So a little bit about the Corona Business Loan Interruption scheme. It was part of the government's £330 billion support package, bailout, whatever you want to call it. That was announced about 3-4 weeks ago by the Chancellor and by the Prime Minister in response to the COVID-19 crisis. And this particular scheme was launched on the 23rd of March. That's 3 weeks ago, just almost 3 weeks ago, 2.5 weeks ago. And the basis of the scheme was to allow 40+ lenders who were approved in the scheme to lend anywhere between £5,000 and £5 million to small businesses in the UK. It had to be UK based, had to be up to 45 million turnover, so very much focused on the SME marketplace. And it was to increase liquidity in the market by providing a government guarantee to the lenders of up to 80% to allow them to lend the money to SMEs. And this was especially important because SMEs at this moment in time, obviously a lot of them are shut down, a lot of them are closed, a lot of them have reduced trade as a result of the crisis, so they wouldn't necessarily qualify for conventional bank lending, so they couldn't show they could afford the repayments for the next 3-6 months. So this scheme had a sort of double whammy with it was so the 80% guarantee. So if the debt went wrong, the government would pay 80% of the remaining balance to the banks to lessen their risk, so it should help their appetite. And also the government would make up for the fact that the business probably wouldn't be able to afford any payments for a 3-6 month period by covering the capital for a 12-month period. So the idea was you'd have a loan, the government would make the payments for the first year, and then the next remainder of the capital balance we paid back over the next 5 years. In the meantime, hopefully the world's returned to normal. So on paper, it sounded brilliant, and it was met quite positively, I think, by a lot of people in the business community, by the Federation of Small Business, by the Chamber, etc., etc. So that all sounded great. I think guys like me could probably see some of the flaws in this straight away. And one of the biggest flaws was the fact that it had been administered by the banks, and the government were effectively asking the banks to do a massive roundabout turn, turning an oil tanker, really, with regard to their credit policy. Banks are quite conservative lenders to business, and all of a sudden they were saying, you've got to lend money to these people who can't afford to pay it back. But the proof's always in the pudding. And since the launch, we've had some figures produced, and I was talking to Paul just before this meeting. We've had some more figures have literally come out in the last 10 minutes with regard to where we are on the scheme. So the figures that were produced last Friday were quite damning, really. And they indicated that there have been just over 130,000 applicants to the scheme, and the amount of actual acceptances stood at 983. So under 1,000 people have been accepted for the scheme from 130,000 applicants. So if you do the maths yourself there, that's about 0.7%, 0.7% had actually been approved. So that's not very positive. Since then, some figures have been announced today. I was expecting them tomorrow, but I guess they've been moved forward because of Good Friday. And these are literally just have scribbled these on my notes here because they've just come out that just over 300,000 businesses have applied for this scheme now, and the amount of loans that have actually been drawn down is 2,022. So the current acceptance and drawn down rate of loans for this scheme is 0.65%. So in my notes I've written here, I expected that when their figures were announced tomorrow for them to go up slightly, actually they've dropped slightly. So the scheme is still not getting the money out to small businesses, which is absolutely ridiculous. So since it was launched, the banks have been creaking at the seams. They're not designed to have 300,000 new applications for finance in 3 weeks, I can assure you, having been in that environment. Every bank manager I know, and I speak to them most days, their bank manager. I've spoken today to Barclays, to Lloyds, yesterday I spoke to NatWest. They've all got piles of applications on their desk, which they know are going to take weeks and weeks to get through. So at the moment, if you make an application, you're normally not getting a call back about that application or any feedback about it, sort of 2.5 weeks at this moment in time. And even that response may be, we're not sure, we need some more extra information. So you provide that extra information, then you go to the back of the queue again. So realistically, you're looking at 2 to 4 weeks to get any kind of decision for most banks. Not all banks, because some of the smaller ones, like Yorkshire Bank, for instance, Metro Bank, because they've got a considerably smaller base of customers to actually work with, because the banks are only working with their own clients, they can get through these a lot quicker than a Barclays or a Lloyds, who are taking the bulk of these 300,000 applications. The other thing that came out in the review last Friday was a requirement of the scheme, which has been disputed by a lot of business owners and by the FSB. And that was that individuals, directors, were having to provide personal guarantees for this finance. So the government guarantee of 80% would kick in, but only after the director had provided the personal guarantee and had actually tried to pay the loan back themselves. And a lot of business owners were kicking back on this, saying, we weren't responsible for the corona crisis. You know, we're being asked to furlough our staff to help keep the business going forward. Why should we personally have to guarantee loans for the bank, right, when this is not of our doing? And while I understand that from a basic point of view, I've got mixed feelings. And why should the bank then lend money to you if you're not prepared to personally guarantee it? But there was a lot of kickback about it. And the government came out with a fudged response, which I kind of call C-Bliss 2, if you like, which took away the requirement for lenders to have to take personal guarantee for loans under £250,000. So now, if there's a loan up to £250,000, then no guarantee is personal guarantee is allowed to be taken at all. It's against the rules of the scheme. Above £250,000, it's a negotiable thing. So it can be taken for the remainder of the amount. If you borrowed £500,000, there's an unsecured element of 250 and a guarantee for 250. Sometimes just the remaining 20% that's been taken as a guarantee is up to negotiation, but up to £250,000, no guarantee is to be taken. Now, while that sounds very good, it's had one major downside and one major problem. The way the banks are funded is very different from the way that the alternative lending market is funded. So while banks have the liquidity of having their customers' deposits, they've got government support in place. Smaller lenders, so you probably come across people like Funding Circle, a very well-known peer-to-peer lender, IWOCA, are very well-known, the challenger banks as well, Shawbrook, Aldermore, etc., who have all either been on the scheme or are desperately trying to get on the scheme. Because their risk models are weighted in a different way, they have to take personal guarantees from directors to support their loans. So all of a sudden, they're not allowed to participate in this scheme, and they're not allowed to even apply to participate in this scheme. So they've really been cut off at the knees, because guys like me were absolutely desperate for those lenders to be approved for this scheme. We could roll out with it, get applications put on their platform and get the money out there to businesses who desperately need it, haven't got 3 weeks to wait for the bank to get back to them. Unfortunately, this requirement, though well intended, I believe, has meant that these lenders now no longer can participate in the scheme at all. And not only that, because the remainder of the businesses out there can't actually repay their loans because investors are pulling their money out of these platforms, they're in desperate straits now. So not only can they not participate in this scheme, but they can't really do a huge amount, and their default rates are going through the roof. So the alternative lending marketplace, which we were all hoping would at least remain alive while this crisis went on and while the banks were dealing with the government scheme, has had the knees cut off. And it's absolutely, it's despairing at this moment in time. So the current position of this, obviously some new figures have just been produced, as I mentioned there. It shows that the acceptance rate hasn't gone up, which is really disappointing, but not hugely surprising. Certainly my dealings with bank managers when I talk to them is that a majority of applications are either being rejected, or they're being sent back for information which directors cannot produce, or the conditions of the loan are such that effectively might as well have been rejected. So it's very frustrating for the banks. Most clients are still waiting 2-3 weeks for a callback, which is absolutely a nightmare. The bank underwriters can't turn deals around quick enough, and this again is another one of the problems of bringing in that requirement for loans up to £250,000 to have no guarantee. It's meaning that banks now, the underwriters of the banks who still have to make the final decisions, are becoming even more cautious than they would otherwise have been. Now, bearing in mind, bank underwriters, trust me, there'd be funeral directors if they weren't underwriters half the time. They're now looking at things, they're sharpening their pencil, sharpening them again when looking at applications, because they know that in a year's time, if the director wants to walk away from the business and leave a big debt, they can do that because there's no guarantee in place. So the underwriting's taking longer, the application's taking longer, the questions being asked are more and more detailed, so it's going back and forth between the bank and the applicant, which is leading to even more frustration. The alternative lending market is effectively dead at this moment in time. And I think it was Mark earlier who used the term kicking the can down the road. And that's exactly how I feel about this scheme as well. And when I spoke to a bank manager this morning, we had exactly the same conversation, that we've got this issue, we can solve it potentially by getting some liquidity into the marketplace. But if directors aren't responsible for paying this loan back personally, if the business then fails in a year, 2 years' time, we'll walk away. And I can see the banks having massive problems with bad debt in 24 months' time on this scheme. And who's going to pick up the tab for that? Well, 80% of it will be picked up by the UK taxpayer, the government, UK PLC. So I think there's going to be major issues there down the line. And I think the government are trying to defer this problem, basically get it to go away and hope it doesn't come back. So if you've applied for this scheme, if you've made an application already with your bank, please be patient. Don't chase up, don't expect phone calls back in 2 days, because it simply won't happen if you're with one of the high street banks. Like I say, you're going to have to wait a couple of weeks, same as a lot of people are having to wait for their grant applications to come back, because it's going to take a period of time. If you are declined for the scheme, or you know anyone who's been declined for it, I'm more than happy to have a chat with them. But the reality is, as it stands at this moment in time, if their own bank have turned them down, they've probably got nowhere else to go. So they will have to come up with other ways of actually trying to save their business, whether that's furloughing staff, whether that's making cutbacks, maybe it's extending the creditor days, whatever it is. There's no point in sitting and waiting for money to appear here. This is not an easy to be accepted for scheme, and the stats bear that out. And effectively, most of us, certainly brokers, and certainly the banks, and certainly alternative lenders, are all desperate for there to be a seed list free, where the requirement for the personal guarantee is certainly loosened, and so a lot more lenders can be approved onto the scheme. My particular body, the National Association of Commercial Finance Brokers, I've written a second letter to the Chancellor today that came through about half an hour ago, basically begging for someone to have a look at this, to try and extend the scheme out to the people like the funding circle. First of all, to save them, but also to allow guys like me to get involved, to release money. I can do 20 applications in a day, and then X amount of money, and there's loads of me sitting around waiting for the green light, but we can't get involved in the scheme at this moment in time, which is really frustrating. So obviously I'm keeping people up to date with this. I'm going to a lot of Paul's meetings, a lot of other networking meetings, doing lots of stuff on Facebook, etc., to try and keep people up to date with what's going on with this scheme, any positive changes, any negative news. Obviously I'll have to do something about these new figures out there. So please, if you know people who are desperate for money, who are applying for the scheme, for them to be patient, to hold fire. If anything changes on it, I will make sure I keep people up to date, and obviously help with any applications I can get hold of. So the news, to be honest, at the moment is a little bit downbeat about this scheme. These things always take a long time to wash out, and mistakes are made, and I think they have been made. But hopefully things will turn around in the next week or so, and we'll be able to get some more lenders on board, and I'll be able to really do some business for a lot of SMEs out there. That's pretty much all I wanted to say. So if anyone's got any questions, or anyone's got anything they wanted to talk about with the scheme, then please, this is your chance.
Right, okay. Just, there you go. Right, does anybody have any thing for James? If Mark Exley.
James, what kind of commercial terms are we talking about for these loans? I mean, what kind of interest rate are we talking about?
Okay, so one of the good things about the loan was there were no arrangement fees. So while the bank would traditionally charge anywhere between 1% and as an arrangement fee for a facility like this. It was done for fee-free. Interest rate-wise, it varies bank to bank and depending on the quality of the client. The lowest I've heard is 3.4%, and the highest I've heard is around about the sort of 6%. You're looking at anywhere between, say, 3 and 6% interest rates for these loans. That's obviously base rate linked. You can fix the rate, you can have a variable rate, whatever works. But they're the sort of figures which I have to say are pretty competitive with regard to commercial lending. They're pretty good rates.
Anything else? Anybody else? Floor is now yours.
James, what are we into in terms of engaging you for helping us from, you know, with our applications as such?
Okay, so I can help clients with applications for a receiverless loan. Initially, I'm happy to talk to anyone about, you know, their eligibility to apply. If I believe it's worth them applying, I can help them. There is a fee involved in that because it's the only way I'm earning any money at the moment. But I only actually get paid if there's a successful application. So it's in my interest to really funnel down and to see if the application is going to be successful or not. So I will I'll talk to anyone about it. I'll give them my honest opinion whether they think it's worth them applying or not. If they want to apply and they want me to help them out, then I'm happy to sort of, you know, make sure that all the forms are completed correctly, the application's packaged correctly, and then some lenders are happy for me to send it to them. Other ones insist that the client does it. But obviously, I make sure everything's checked over and done right in the first place. So there's the best chance of being successful on an application. So basically, anyone who wants to apply for the scheme, give me a shout, and I'm happy to have a chat with them. No obligation in the first place.
Okay, well, I might take you up on that a bit later on.
Okay. Anybody else? Anything else for James? Very comprehensive, James.
Margot, you got a question?
Yeah, oh, sorry.
No, you carry on.
You mentioned about whether you had a funding circle loan, the issues with it, James. Is that still the case, or has the funding circle relaxed that?
No, I did a video on this a couple of days ago, and I stuck it in quite a few pages actually, and I brought it up with the FSB who weren't aware of it. If anyone has a funding circle at this moment in time, and I think 57,000 UK businesses have a funding circle loan, it's been incredibly popular. They have a caveat in their loan agreement, which I don't think they ever expected to actually have an issue with, that if you borrowed a certain percentage of the outstanding balance of their loan with another lender, so for instance, if you had a loan of £100,000 at a funding circle, and then you wanted to borrow £75,000 for someone else, then you had to go to the funding circle and ask permission to actually borrow this money. It's not an uncommon thing, but it is something which I don't think many people had to call on. But obviously, in situations now where you've got a customer with the NatWest, you've been on NatWest for 10 years, they've got a funding circle loan for a couple of £100,000, and now they need another £150,000 to survive. So technically, if they're trying to borrow this money from the NatWest, then they should tell the funding circle about it. Now, if they don't tell the funding circle about it, then there's a breach of terms and conditions, and the funding circle are then well within their rights to call in this loan. There's £200,000 they lent. We've had correspondence from the funding circle about this week, which is why I did the video, which is probably what Margot's alluding to, that they are going, and I think because they're a bit peed off with the way they've been treated by the government in this scheme, they are going to enforce this. And the only way that they won't, so that's my phone going, that's Lloyd's calling me now. The only way they won't enforce this is if a client goes to them and they seek an alternative with regard to some kind of preferential debt agreement. So the NatWest would then give preference to the funding circle, or they'd offer some personal security to the funding circle, all things which really take time and the customer won't do. So my advice the other day remains the same, that if you have a funding circle loan and you want to apply for finance elsewhere, let the funding circle know as soon as possible, because they are playing hardball on this, because they are pretty upset with the way they've been treated by the government, and they are going to look to call debt in and basically make people bankrupt if they have to do that to get their money back. They will do that.
Mark, sorry, Paul. I just wanted to ask very quickly, James. Sorry. James, the Chamber of Commerce just announced, some of the stats on people taking up the financial assistance the government has announced. it appears that the figures are fairly low. I mean, for example, the applications from small businesses for these grants, and I don't know exactly which funding they've gone for, but it seems to be sort of low 30s and that kind of thing. Why do you think that is? Why do you think people are not sort of jumping on the financial assistance bandwagon?
Well, I'm not hugely okay with the figures on the grants. That's not something I get involved in, the small business grants. I think most of the advice has been on the grants. And again, I will defer to anyone who's an expert. Someone like Marie, you're pretty qualified for this, I'm not sure. But the business grants.
Yeah, I've applied.
Right, so you've applied for it.
I've applied. There's quite a few of the retailers in Lutterworth that have already received it. We're still waiting.
So my understanding is that a lot of people have been automatically written to, if that's a word, because they pay business rates. So I think a lot of people are waiting for correspondence from the council with regard to the rate scheme without being. Is that not the case, Mark? Well, I don't know.
Sorry, James. I think a lot of people are waiting because that's what they've been told. The reality is, if it's South Northants, look very hard and you can find the application form. I found it on Monday and I filled it in and sent it off. So I filled it in online. And I think Northampton Borough Council's also got it. They're just not telling anyone about it.
Right.
But it is there, so you need to get your application in because at least it then can be processed. But it's very straightforward. You just give them your rate number, what your rateable value was, and then things like your company number, VAT number, that kind of thing. That's the fraud element of it, I think. And then hopefully the money will land at some stage, given the details, so it should work. But when it's going to work, I don't know. And it's exactly the same as the furlough payments. The portal is being tested today with certain big clients, so they can employers, so they can actually prove the concept, because Capgemini built it, but it's meant to go live on the 20th. If it goes live on the 20th, obviously at that point it's a case of how much lag is there between getting a successful data entry to actually getting the money in your bank account, because most people who are being furloughed will need to be paid at the end of April by their normal employer with the money claimed back. So it's all about the lag. It's exactly what you said about how long it's taking to get the loans, and everything is about time, isn't it? Time is critical.
Well, Go on,
sorry, I wasn't referring specifically to the grant situation. I think it was just simply the whole concept of the government's made all this money available, and yet the small businesses seem to have not taken it up in droves.
With regard to this scheme in particular, the CBLIS, the loan scheme, 300,000 people applying is an enormous amount.
Of course.
When you take away the small businesses who probably don't need the scheme, you take away the small businesses who are continuing to trade, and all banks, actually, to be fair, even though I'll say there's a minimum of 5,000, they've started their cut-off point at £25,000. And because every bank, again, has their own criteria how you can apply, realistically, you need to be turning over a minimum of £100,000 to actually even apply for the scheme, in reality. So when you look at businesses who are turning over £100,000 in this country as a minimum, who actually need to borrow the money, who are prepared to borrow the money, I think 300,000 people applying is actually quite a fearsome amount. I mean, I'm not sure how many funnel down into that, but I would imagine that's quite a lot. Yeah. And that's only the ones who, frankly, we know about. In all honesty, most bank managers have probably got a pile that big on their desk for ones which haven't even hit the system yet, in truth. So I think it's one of those things where I think some people are also waiting because they're hoping that other lenders are going to be approved to the scheme. That's certainly the conversations I'm having with people saying, look, you can't apply now, or don't apply now, or if you've been turned down with someone now, that's fine. But we're hoping that there's going to be a lot more lenders approved to the scheme, so therefore it's worth looking at then. Some people are putting these decisions off because the scheme has been announced for a 6-month period. So if you don't need the money now, use your cash, fine, because even though it is a low interest rate and there is capital repayment holidays, you're still got to pay it back eventually. So you're still going to be paying that interest. So if you can afford to do it from your cash reserves, then do that, and then apply in 2 months' time when, frankly, it's going to be a lot easier once all the creases have been ironed out and the initial 300,000 people have been dealt with. Then you can apply and probably get your money within a few days if you're a good business. So I think that figure is going to go up dramatically. But I mean, knowing what I know about the banking industry, to have 300,000 people apply for finance, complicated finance, which it is, all at once is my goodness, that's a lot of people. That's a lot of people.
Okay. Anybody else? Oh, Kevin, you've been very polite and actually put his hand up.
I did.
Yes.
I'm a very polite person, Paul. It's just you I'm rude to. It's just I just wanted to throw this in. Somebody touched on the rates-related grant earlier, I think, just to let you know, as far as I'm aware, some of those have been paid in the Daventry area. Some people have had the money and others haven't. So that is one bit. Just a bit of good news is that one bit of it does seem to be going through. If you're lucky enough to not be in the forgotten.
Well, I think a lot of that's because the rates thing, as far as I know quite a few people have been paid out, certainly in the Coventry area and whatever, and Margaret's mentioned Rugby Borough Council.
Yeah.
Because it's almost a tick box exercise. You put your bank details in, you are eligible for it. Here's your money. The problem with this scheme is it's not the government who are actually administering the money, which is a common misperception. It's a government loan guarantee scheme, but it's the bank's money that's being lent here. So the banks are administrating it, they're underwriting it, and they're releasing their funds. And as soon as you involve the banks in anything, things take 10 times longer. So it's not a tick box exercise, it's a credit-based assessment that's being made by an individual like you and I with a pen, sat here working out calculations whether a business can afford it. So this, unless there's significant resource thrown at it, and I don't think that the experience is there to do it, the banks won't be able to cope with the demand for the scheme. The resources isn't there.
Just a point I was going to make on the grant is that although it's a grant, I think it classes as other income in terms of corporations.
Taxable, yeah, taxable.
So effectively, if you do get 10,000, it's actually only 8,100 in reality, because 1,900 of that you're going to have to put aside as corporation tax.
Assuming you make a profit, of course, at the moment, which I think.
Yeah, sure.
Yeah, which obviously without 3 months of trading, I dare say a lot of people will be in a break-even situation, so they probably won't even have to pay tax on it. But it absolutely is counted as other income. My understanding is, so you're paying corporation tax on it.
Yeah, I think my only concern about everything that we're doing is that, like when I mentioned that expression about kicking the can down the road, because most people have taken a break on paying the VAT return. If any of them are due in the next 2 months. To be filed, they're then counting the direct debit. They've been actually asked to do that by HMRC, so that's fine. But then it's still got to be paid within a year. Much the same as if people try and get a break on corporation tax. Most people probably funding corporation tax from current earnings rather than putting it away in a bank account. They are putting it away.
I would say 90% of people do that. Yeah,
they're probably going to need to use it for normal use at the moment. So there's that as well. So I think people could, if they're not careful, actually just make life very, very difficult in the next 18 months. So I think there's got to be some kind of commercial decision making by businesses.
Okay, thank you.